You got what you asked for. The crypto markets are down, and this is the chance to buy the dip. And while in the past it sounded like a great idea, when that time actually arrives, it is much more difficult than expected. Elon Musk has stated that Bitcoin seems to be too high. And of course, we know the power of an Elon Musk tweet. It makes the price of these markets go down. So here we are. This is what we have all been waiting for. We have always said if the price of crypto goes up, perfect. But if the price of crypto takes a dip, even better, because it's a buying opportunity. But here we are right now, and it is very scary. So why is it so hard to buy the dip? And that's exactly what we're going to speak about in this video. And if that sounds good, make sure to like this video. And with that being said, let's get into the content. Welcome aboard the Bitcoin Express. My name is Chase. Let's get to it. The crypto markets are down. Bitcoin was trading just at about 58,000 the other day, and now it's sitting at 53,000. Ethereum is back under $2,000. Crypto is down 10%, 15%, 20%, all in one day. And we would say this is the time to buy the dip. But actually buying the dip is not a good idea majority of the time. And I'll explain to you why. If we look at the whole entire cryptocurrency market, there are still coins that are down from their all-time high from 3 years ago. Of course, we can see up here Bitcoin, Ethereum, they have surpassed their all-time highs in 2021. But these other coins such as XRP, Litecoin, Bitcoin Cash, EOS, and the list goes on. These coins are still down from their all-time high 3 years ago. Now, I'm not pointing out any coins specifically. What I am trying to say here is that majority of the crypto market, when it dips, when it crashes, it stays there and it doesn't always come back. And right now I'm speaking to people that are investors, long-term investors. For people that are day traders, this doesn't really apply to you. It does not matter if the price is high or low. All that matters is that there is volatility in the market. If you're a trader, it doesn't matter if the coin that you bought 3 years ago is now down 80%. As long as you are trading in that time frame and it's volatile, there is a chance to make money. But for the longer term investor, it is not always the best case to buy the dip. But we have seen with Bitcoin time and time again over the last 12 years, it has rebounded and it is still at number one. In a perfect world, we look into the future and we hope for a crash, a dip. As they say, buy when there's blood in the streets. But when that time comes, it wasn't as we expected. We need to stop and imagine and think about what is the reason that there's going to be a dip? How will we feel? What will our emotions be like? Because when that time comes, it is very scary because this is contrarian investing. You are literally going against the entire market, and this is a very hard thing to do. Even pushing crypto aside, when you are the minority in a room, voting against everyone else is very hard and difficult to do. So we know that we're supposed to be fearful when others are greedy and greedy when others are fearful. But the way that we live our lives is be greedy when others are greedy and fearful when others are fearful. Because buying the dip always is a risky strategy. That's really the truth. It is a risky strategy and it may take a long period of time to pay off. Now the thing is, there's two kinds of buying the dips. The first one I'm going to mention is not buying the dip, and that is buying something just because the price goes down and that's all you know about it. If you buy something and you don't even know what it is or how it works, but you see the price goes down and you buy it, this isn't buying the dip. This is buying blindly. Buying the dip means you buy something because you have been studying it. You know exactly how it works, and when it dips, you look at it that it's on sale and it's a perfect buying opportunity. And when it comes to crypto, what I mean by this is not just reading one article about your cryptocurrency or watching one video here or there. I'm speaking about learning what your cryptocurrency is. What is the use case? Is there an elastic supply or a limited supply? Is there a founder? Are they still involved? What percentage of the crypto do they own? How does this blockchain actually work? Are there rewards and punishments and so on? So this is what I mean by doing the research so that when you buy the dip, you know exactly what you're buying. Because if you just got into crypto and you see some cheap coins at 20 cents, 30 cents, and it goes down and you're just like, buy the dip, it's cheap, it's cheap. Like I said, if you're just going into it blindly, it's not buying the dip. And then what happens is you buy the dip, you think you're getting a deal, and then it dips even more and you buy again thinking you're getting a deal, but it just keeps dipping for years and years and years. And again, I'm speaking to long-term investors. Remember, if you're a day trader or a short-term trader, all that matters is that there is volatility in the market. And when we look at the crypto space, there are 6,300 coins right now on CoinGecko. 95% of these coins, maybe even 98% of these coins will not be here in 10 years from now. So just by looking at this market saying buying the dip, 95% of the time, 98% of the time, it's not buying the dip, as these coins won't actually come back. But Bitcoin in particular is the coin that has been around for more than 12 years now, and that has rebounded time and time again, breaking its all-time highs, and it's always sitting at #1 on CoinMarketCap. This is the coin that I specifically pay the most attention to and study the most, and it really all started for me about 3 years ago when I read this book, The Bitcoin Standard, and I definitely recommend this to everyone in crypto, even to people that hate Bitcoin. Why? Because this book is not even about Bitcoin really. The first 3/4 of this book describes how money works, how traditional banking works, because this is very important to know before going into crypto, right? It doesn't matter if you're in Bitcoin, Ethereum, or something else. Understanding how money, right, the money we use today works is very important. Now, since I've been reading this book and studying, a lot has changed in the Bitcoin space, right? And you can use the same method for any other cryptocurrency as long as you're doing the research. After learning all I can learn about Bitcoin, and I'm not even there yet, it's probably going to take me my whole entire life to learn really what Bitcoin is, we can see that institutions are finally here and they're pouring billions of dollars into Bitcoin. We have MicroStrategy, Tesla, and a whole different bunch of companies entering Bitcoin. Bitcoin also is declared by the SEC to be a non-security, along with Ethereum, making it safe for institutional investors. And we have Bitcoin futures trading on the CME. So this is the research, I would say, that I did for Bitcoin. And you can do the same thing. I have this whole list of cryptocurrencies. Go down, look where your money is, and start to ask these questions. Where is it being traded? Who has access? Who owns it? Is it friendly with governments and regulation? And ask all of these questions and start to learn about what you're buying. Because remember, if you're just buying because the price goes down and that's all you know, buying blindly. But if you're buying something on a dip and you know exactly what it does and how it works, that is buying the dip. And as we can see from this tweet from Dan Held, this is a tweet that I always look at over and over again. Even in bull markets, there will be dips. Already in 2021, we have seen Bitcoin come down 20-25% and the rest of the market. But just because we had dips in the past that rebounded quickly in bull markets does not mean that it is guaranteed to repeat itself, but it definitely does rhyme. So it would be likely that even though we are having these dips in a bull market, they will rebound. But because we are humans and we can't time markets exactly, for all we know, we can have these dips in Bitcoin and crypto, 15-20%, and it may not rebound immediately. It may take weeks, months, maybe even years. So it's very important that when you are buying the dip of something of value that you did all the homework on, that you also have a longer time period. Because even if you're buying something of value that 110% you are confident it's going to have value in the future, this doesn't mean that it's going to rebound the next day or the next week. But the longer you wait, the more likelihood it will rebound, and not only rebound, but surpass that all-time high and make you major profits. Remember, the space of crypto or investing in general, it is very tricky. When you are buying the dip, you are a contrarian investor. You are going against everyone else. And the only way you can do that is if you do the homework and understand what you're buying. Read other books, read other news articles, watch other videos, and always in the end of the day, come to your own conclusion. And that's the way that hopefully you are going to make money in this space. Like this video, subscribe to the channel. Thank you for listening, and I'll see you next time.